All right, I am showing you the chart of the Goldman Sachs. It's had relative strength the last few days. Today is July 14, 2009. Just wanted to show something about time frame trading, meaning combining your different time frames and coming up with a trading decision. Markets go inside out, meaning charts that start developing from the lowest time frame to the biggest time frame, but you always got to start where you are, where the price is compared to the biggest time frame you're looking to trade. So what you can see in my chart, I always have something with no indicators, no nothing, just price and volume on different time frames: monthly, weekly, daily, 240, 60. This is a 39, 15, and 5. All right, so if I'm trying to take a position on what I'm trying to do is where are we from, say, from a perspective of a weekly time frame, the daily time frame, and the other smaller time frames. So take a look at this. So if you look at this area right here, right, this right here, you can see once we went through this supply, right, we choose through this supply, we had an outside outside reversal week higher. All right, so the next place that this stock wanted to go is the previous point, which would be the previous high, or the previous pivot high, which I consider to be here roughly about 210. So how do I get on a trade? So then I start looking at the 240-minute chart, the 60-minute chart, and I use the 30-minute chart and the 60-minute chart to get on a trade, right? So then, we get in 7-Eleven. All right, 7-Eleven, we have this large 30-minute candle. Okay, large 30-minute candle. They just came in, and the next half-hour candle was just an inside candle, right? Lower volume. Less sellers than the buyers, and then what I'm looking to do then next is where is my time frame versus this time frame right here, right? Then I look at this, and there's a good possibility we're going to take this price high out. Okay, then the next thing I do is I go to the higher time frames and see where we are. So the best thing that I saw was, say, if I had gotten on this trade somewhere right here at 189ish. I did not. I'm not trying to hear. I'm not calling out a hindsight 2020 trade. I'm just trying to present to you a good probability, high probability trade. If I had gotten on this, okay, on a break of this supply here for the target of this pivot right here, what I'm looking to do is my stop is going to be right here. This is a very good high probability high risk reward trade. Okay, I mean low risk reward trade. So you got low risk, high reward on this type of trade. You have the time frames aligning versus especially the weekly, and you've got the daily and the small time frames aligning. I use a 15 and a 5-minute chart to stay on a trade. The 15-minute chart, I may use it, say, if I'm on a trade on a day time frame basis only, meaning I'm just going to get on the trade, I'm going to establish a position, and I'm going to get out at the end of the day. Then what I'll do is I'll get out that day. The next day, I'm looking at the 15-minute chart to get back on the trade again. But most likely, if I'm looking at this bigger time frame picture right here on a weekly chart, then I'm aligning my trade with that. I'm probably not going to get out. I probably have a stop loss on, and I probably have a good lead on this trade. So this was a beautiful trade. I'm actually keeping for myself for future reference, as well as sharing with the community. I hope you find this video helpful, and let me know if you have any comments or if you think that you have a better way of looking at this, and I can learn from you. Thank you.